Hi, welcome to my YouTube channel, My Solution. I am Raul. In this video, you will learn about bank reconciliation. First of all, why do we need to prepare a bank reconciliation? What happens if we don't prepare bank reconciliation? What if something doesn't match? Or how the bank reconciliation works? Where do we get the data we need to prepare the bank reconciliation? Don't worry, I will answer all your questions. And to begin with, first, we define bank reconciliation. Bank reconciliation is a statement which brings into agreement the cash balance per book and cash balance per bank. It is used to compare your records to those of your bank to see if there are any differences between these two records for your cash transactions. The ending balance of your version of the cash record is known as the book balance, while the bank's version is called the bank balance. What if the book and the bank balance doesn't match? It's normal to see minor differences due to timing, including items that haven't yet cleared the bank. But you should be able to easily explain those differences. For example, you might write a check to a vendor. This reduces your cash balance per book, but your bank shows a higher balance until the check hits your account. Those checks are known as outstanding checks. Later on, I will explain what is outstanding checks. Another example is an automatic electronic payment might clear your account a day before or after the end of the month, and you might have expected to see it in different month. It could also be an overdrawn bank account, bounce checks, and overdraft fees. In some cases, the bank may even elect to shut down your bank account. When you can easily account your discrepancies, there's probably no need to worry. So what's the importance of reconciling? It is also helpful to complete a bank reconciliation to see if any customer check have bounced or if any checks you issued were altered or even stolen and cashed without your knowledge. Therefore, fraud detection is a key reason for completing a bank reconciliation. When there is an investigation for fraudulent transactions, it may be necessary to reconcile a bank account on a daily basis in order to obtain early warning of a problem. Reconciling your account also helps you to identify administrative issues that need attention. For example, you might need to reevaluate how you handle cash flows and accounts receivable, or perhaps change your record keeping system and the accounting processes you use. Managing properly your banking transactions result in outcomes such as the following: knowing how much cash you really have on your accounts, avoiding bounce checks, avoiding bank fees or for NSF, knowing if customer payments have bounced or failed, and determining if any action is needed, keeping track of your outstanding checks, and following up with payees, making sure every transactions get entered in your accounting system properly, aware of any bank errors. There are two general forms of bank reconciliations. One form is called simple reconciliation and the other form is called the reconciliation of cash receipts and disbursements, or famously known as the proof of cash. In this video, I will be showing you what is a simple reconciliation. I will be uploading a separate video regarding a proof of cash, so make sure to subscribe to our YouTube channel to watch more video on proof of cash. In simple reconciliation, the difference between the cash balance reported by the bank and the cash balance per the depositor's record are explained through the preparation of the bank reconciliation. The following items need to consider to prepare the bank reconciliation. First, we start with the bank reconciling items. The deposit in transit. These are collections already recorded by the depositor as cash receipts, but not yet reflected on bank statements, or funds sent by the depositor to the bank that have not been recorded by the bank, because deposits made after the bank cuts-off date. Therefore, this will not reflect in the bank statement. In both cases, the balance per books record will be higher than those of the bank. Next is the outstanding checks. These are checks already recorded by the depositor as cash disbursement, but not yet reflected on bank statements. Or stated differently, these are checks written for payment by the depositor that have not been presented to the bank. This will result in a higher balance per bank records compared to the depositor's book records. Next is errors. There is no definite rule can be made whether these errors can be added or deducted. Errors will have to be analyzed for proper treatment, but errors are reconciling items of the party who committed them, so it can be bank or book error. Next is the book reconciling items. First is the bank credit memo. A bank credit memo is an item on a company's bank account statement that increases a company's account balance. A few examples of bank credit memo appearing in a company's bank account include interest earned for having money on deposit, bank collected a note receivable on company's behalf, a refund of previous bank charges. Since the amount of the bank's credit memo has already been added to the bank's balance, the bank reconciliation will not reconcile unless the amount is also included in the company's general ledger cash account. To record the bank credit memo, the company will debit cash and credit another account. For example, if the bank statement shows a credit memo of 10 for interest earned, the company will debit cash for 10 and the credit interest income for 10. The company's cash account needs to be debited because its asset has increased. Another book reconciling item is bank debit memo. A bank debit memo is an item on a company's bank account statement that reduces the company's account balance. Some examples of bank debit memo include a bank service charge for maintaining the account, a deduction for a customer's check that did not clear the bank account, a bank fee for handling a check that was returned for insufficient funds, a monthly loan payment if you have a loan to the bank. Since the amount of a bank debit memo has already been deducted from the bank account, the amount must also be deducted from the company's general ledger cash account. For example, if the bank statement shows a debit memo of 5 for a service charge, it means that the company's general ledger cash account will need an entry that credits cash for 5 and debit bank service charges expense for 5. The company's cash account needs to be credited because the company asset account has increased. The bank debits the company's bank account balance to reduce the balance, because its customers' accounts balance are liabilities for the bank. For instance, when the bank records a customer's deposit, the bank debits its cash accounts and credit its liability account, which is customer's deposit. Hence, when the bank pays a customer's check, the bank's cash is reduced and the bank liability account is also reduced. The bank records this with a credit to cash and a debit to customer's deposit. The following formats may be used in reconciling the book balance and the bank balance. First is the adjusted balance method. Under the adjusted balance method, the book balance and the bank balance is brought to a correct cash balance that is to be presented in the balance sheet. Next is the book to bank balance method. Under this method, the book balance is reconciled with the bank balance, or the book balance is adjusted to equal the bank balance. Next method is the bank to book. Under this method, the bank balance is reconciled with the book balance, or the bank balance is adjusted to equal the book balance. The adjusted balance method is preferred over the two other methods. Take a look of the sample problem, and I will guide you all the way on how to prepare the adjusted balance method to arrive at the adjusted cash balance as required in the problem. Jack Company's records show a $12,650 cash balance on December 31, 2019. Jack's December bank statement reports the following amounts: cash balance of $10,050, bank service charge $10, NSF check $90, deposit in transit $3,000, outstanding checks $500. So the requirement is what is Jack's December 31, 2019 adjusted cash balance. So based on the general procedure, we can prepare the bank reconciliation. First step is determine the balance per book and the balance per bank. As shown in the sample problem, the cash balance on the book of the depositor has a debit balance of $12,650. The bank balance is shown on the bank statement as $10,050. Next procedure is trace the cash receipts to the bank statement to ascertain whether there are deposits not yet acknowledged by the bank, or what we call the deposit in transit. In the illustrative problem, the amount of deposit in transit was already given, amounting to $3,000. Next step is trace the checks issued to the bank statement to ascertain whether there are checks not yet presented for payment, or what we call the outstanding checks. In the illustrative problem, it clearly states the amount of outstanding checks, which is $500. In some problem where the detail of disbursement was given, what you are going to do is to just do the matching game. Like for example, if you issued 10 checks during the month, say check number 1 to 10, also to make it more simple, just for illustration purposes only. By matching one by one, each check number you issued in the bank statement, you will come up with the check not appearing in the bank statement. Assuming only check number 8 and 10 not presented yet to the bank, or not appearing in the bank statement, therefore these two checks are considered to be outstanding checks. Next step is the bank statement should be examined to determine whether there are bank credits or bank debits not yet recorded by the depositor. As seen in the depositor bank statement, there is bank service charge of $10 and NSF check amounting to $90. Last step is to watch out for errors. Again, errors are reconciling items of the party committed them. In the illustration problem, there was no errors committed. At this point, a formal reconciliation may be prepared because all the reconciling items have already been determined. For the adjusting entry, only the book's reconciling items require adjusting entries on the book of the depositor. The adjustments are necessary to bring the cash in bank balance to its correct balance for statement presentation purposes. The pertinent adjustments are the following: debit bank service charge $10 and credit cash in bank $10 to record the bank service charge. Next adjustment is debit to accounts receivable $90 and credit to cash in bank $90 to record the NSF check. And that's all for bank reconciliation. If you find my video helpful, please comment and like our video and subscribe. Up next, I will be uploading new video on proof of cash, so better press the bell icon to receive instant notification. Thank you.